Welcome to the Edge Up Podcast with your hosts Reed and Glenn from Hawaii Trading Academy.
Aloha guys, Reed and Glenn here. Thank you for tuning in. In this episode, we're going to dive into 4 major regrets that we've come across in trading and what they are. So hope you learn from this and take some value. Let's get into it.
Regret, man. We heard that term, right? Where was that movie that back in the day, the guy got the tattoo on his collarbone? No regrets.
No regrets.
Regrets. So let's tie that in like that. I'm sure both of us have stories of regret getting into trading. Today we want to cover 4 of the biggest regrets that we've made in our trading career, and also shared with many experienced traders and successful traders throughout our time and our research. Because trading, we know that it's good, and investing is highly lucrative, lots of risk, but it's very rewarding as well. But without risk, there's no rewards, no challenges, right? So doing our research, learning on this journey, we've learned that many seasoned traders, just because you start getting into Wall Street, you trade for a reputable firm and you're a professional, you're still human at the end of the day. And we see traders that have made costly mistakes, and of course they would take it and they would learn from it. So we want to just go ahead and share that with you folks. And the thing is that with these great traders, the thing that separates them from the average or beginner or retail trader or independent traders like ourselves, it's that they use their regrets and turn them into lessons. They really dissect, they roll back everything, rewind, and just understand, okay, what was my feelings there? Why did it make that decision? How did that happen? And so by unpacking these 4 big regrets that we hope to share with you guys, and to avoid, or at least be aware. You may not avoid it, maybe you need to go through it so you can learn yourself. But our goal tonight is to just be able to share these and help you guys gain a more understanding knowledge of the markets.
Yeah, before we get into really the 4 points, to put out a definition out there of regret so we're all on the same page here. Regret is the emotion of feeling sad, it's repentant, it's disappointed over a specific choice. Maybe it's a missed opportunity, or it's something that we did and we regret doing that, or we wish we could take it back. So, I mean, this emotion of just feeling sad or disappointed over an outcome in trading, it's so relevant to all markets, all traders. And so when I hear the word regret, I'm like, oh, don't live life without regret. That I hear that a lot. It's a lesson that I really believe in. But when we're looking at trading, think of it as more, instead of regrets, think of them as lessons. That's what I like to look at it from here on out. But like, let's hit the first one, man. Let's hit that first regret that most people have.
Yeah, starting out, right, in trading, well, whatever attracted you guys to the markets, I myself, I saw trading as a vehicle that the wealthy use. Of course, you come in, I'm like, yo, I need to make money. I see a lot of these guys making money. Wolf of Wall Street, the Big Short, all these big guys, they're just swinging and killing, right? And just banking lots of money. And so the point of not being realistic when coming into trading, that was a big regret. Many traders, I myself, regret, or we didn't have proper mentors or education going into this. Therefore, we set our own conclusion, create our own little world or expectation on what's supposed to happen. Like, hey, telling my wife, hey, I'm gonna start trading tomorrow. We'll be retired. We'll be on a vacation. But obviously that's not realistic. But because we just don't understand that what's involved with achieving these returns, what's involved with dealing with the market. We don't understand that. So setting realistic goals and targets and realistic, like just being present with what the market is telling you or being at this time, that's going to be crucial to understand. And that's going to be crucial for you guys to continue and trade for the long term. Of course, all we want to see is profits. Profits day in, profits day out. We put together spreadsheets. We start doing a compound calculator calculations. I'll be like, okay, all I need is 1% every month for the rest of my life, and I will be good. Right? Reed, I'm sure you calculated some stuff. Like, oh, all I gotta do is make this much every day. I'm good.
Oh
Or
yeah, absolutely. Run the numbers, always running
right,
the numbers, seeing what I'm going to buy with my trading profits without actually thinking about livelihood and expenses of that nature. Especially
right.
in a place like Hawaii, like the median house is constant price of a house is constantly going up. Like I think it's 750 now, $750,000.
I think it's more, bro. I think it's
Probably
almost a
more.
million. Yeah,
Bro, I
yeah.
wouldn't be surprised, but I mean that kind of beats the point right there is like all this fancy beautiful stuff we see on like social media or YouTube. A lot of it's either fake, a lot of it's rented, a lot of it's mom and dad's money, or like some lucky windfall, or some of it's just straight up frauds. And
Mhm.
I think it really caused, especially like being realistic, you're thinking, oh wow, I could get a Lambo in 6 months. I'm gonna be living in a penthouse in 6 months or a year, within a year. Watch me, mom. And I kind of want to touch on this too, is we're seeing a lot of social media leaning into positive toxicity. And what I mean by that is, oh no, you're setting your limits that you can't do that in 6 months. Now, that's true, right? But like being realistic here, as far as like it's dependent on every single trader. It's like you can't sell someone who's had a trouble with a family background. You can't tell them, hey, everything will be good in 6 months. You're going to be a millionaire. You're going to be making a lot of money. So there is that toxicity that can leak into the positive aspect of always see opportunities, always they say like being realistic sets limitations, but with trading it's a completely different scenario. Have
How
that
so?
positive
How
mindset
so? Say I'm
with trading.
like I wake up, like I'm starting to trade. I follow all these great trading pages, all these positivity, these motivating thing. I set my target. I'm gonna be make full-time trader in 6 months, Reed. How does that how does that thought influence my trading?
uh well, in my mind there's always opportunities, but does every opportunity fit your plan? Is it always good to be trading? And the answer is realistically no. And I think that's another thing going into, hey, every, like we said, every single day I need to make this amount. There's people out there, traders out there, who are saying like, oh, I made another 100 today, I made another 100 today, I made and I mean it's not just 100, they're talking thousands and thousands of dollars in a single day. It's just that is not realistic. No trader is making money every single damn day of their entire trading existence. Okay, like I'm gonna call anyone out who thinks that's possible. Like it's not. So there's gonna be losses. There's gonna be drawdowns. Like that's every single trader's realistic approach. And
To just to add that last point,
yeah,
unless you're Goldman and JP Morgan, they make money every day, man. Yeah, so they could
yeah,
take
and different market classes, I
it.
guess, right? Like different structure, maybe different way it's built.
They probably rigged the market for themselves. Who knows? That's just a just throwing it out there. Opinion. Yeah, going back to our point two. So that was number one, being realistic with coming into trading. Point two, not managing risk properly. This was a big one for me. I felt like this one held me back for my first year of trading. Why? Because, you know, I could say it was one of my biggest mistakes because I had almost zero understanding of risk management, managing a trade, putting in your bet. what I was taught was like, okay, go ahead and risk 8 pips or 8 ticks on this trade. And then, if it doesn't work out, then you lose 8 pips. But I didn't understand the whole concept of why, uh, how do I manage my position when I'm in a drawdown compared to how do I manage my position and risk size during a winning streak? How do I do it when I'm in a slump? How do I trade that? How do I know that my mental capital is okay where I can go ahead and size up my positions? You know, those are just different questions that I haven't discovered until a few years after into trading, because me not understanding risk management, of course, it led to big losses. And what does big losses lead to? Me feeling bad, me feeling sad, having that regret, like, oh, I shouldn't have taken that trade. Shoulda, woulda, coulda, right? But if you have proper risk management and you lose that trade, and if it's according to your stats, then you should just continue on. You start building that consistency muscle, having that trust and faith into your system, and understand that okay, the market is in a different phase right now. It's a different environment, where my strategy will not perform the way it would perform on a normal day, right? So that for me was a big regret, not understanding risk properly.
Yeah, when I first got into the market, man, I had no idea or no concept of risk. This kind of bounces off of that first topic. I mean, our first point being realistic. I was not realistic. I think I was trading with the $300 account. I was like, I can make $1,000. Like, let's go. And I mean, I made like 15% off of my very, very first position ever trading Forex. And I was like trying to emulate that again. And of course, chasing that feeling, chasing that win ended up costing a lot more than that win, but it's because I didn't understand risk. I didn't understand it until, later in my career, how risk is important. And like you were saying, that's the key aspect is like I think between the fourth one and our fourth point that we'll bring up in this point, it's probably the biggest regrets or biggest things that happen. One thing about regret, right? I could tell you a story. I was trading the election, when Donald Trump won that election, and I'm not political. I wasn't into politics. I wasn't like voting or anything, but I placed the trade. I guess that was my vote. So I went bullish on it, just the USD, and just to see what would happen. No risk, just no stop loss. Just let that thing fly. And I was up for like the very first 5 minutes, and I was like, "Oh my god!" I was on the phone with my friend. I was like, "Bro, I'm making like I'm up $1,000. Like, dude, this is like I got it." And then immediately lost it right within the same breath, like within the same 5 minutes, it just tanked, right? And I lost.
Before you
I
even hung
lost.
up the phone.
Oh yeah, before the phone ended, the conversation ended. And then immediately I'm like, I'm an idiot. I should have not done that. I knew what I was doing the whole time. And anyway, I was not managing my risk. I was allowing emotions to take over, and that's uh that's just something. I took that regret and I made it a lesson. My lesson is to never trade during high value news announcements like an election. So I'll never trade an election. You'll never find me trading an election. And that was based off of that experience I had.
Yeah, yeah. And just to sum up that point, having zero risk management, you might as well go Vegas, man. Pretty much. Pretty much. Hit the
Yeah, you're
craps
gambling, bro.
table.
That's straight up. That's fact. That's fact right there.
The third point of our biggest trading regrets, not having enough patience. Patience, patience, patience. You see, there's a theme here, guys. There's a theme here where we are listing things with not even, oh, having the right strategy, oh, the markets, how much money you need to have in trading. No, these are things about ourselves. If you notice a theme yet. All right. So number one, three, not having enough patience. Oh, like for me, it was a big thing that I had to deal with because I always felt like I needed to be in the markets, right?
Yeah.
Uh,
Same, same.
yeah, same for you. Well, what do they call it? Like chart porn, where you're just constantly glued to the charts, even though you don't have
Yeah.
a position in, you're just watching the damn thing. And then more so, when you do have a position in, you're like, you just develop this thing where this bad habit where you have to have the chart open because you feel like, well, this is for me speaking. Like, I felt like, okay, I have somewhat control over the market that I'm watching it. You know, like you're watching your dog. You think it's going to behave because you're watching it, right? So,
It's kind of like the superstition you remind me of, like, oh, my team lost because I wasn't watching the football game or basketball game. Oh, they lost because, you know, it's like that mentality. Like, oh, I gotta monitor my trade 100% of the time. It's like that's an excuse.
right? And it's that this, how that meme is, or tell me you're a beginner trader without telling me you're a beginner trader. You have your charts open all the time. I was at the food court the other week at the mall. I was getting food, and I saw this guy sitting at the table. He had his lunch out, but he had his laptop out as well, and he was sitting with a friend. And that guy could not even make eye contact with his friend. His friend's talking to him. He's stuck on the charts. And then, I looked, I think it was a crypto chart or whatnot, but it was like on a 1 minute chart time frame.
Yeah.
And I'm like, dude, somebody learn.
Yeah, I mean, it works for some people, but I think for the most part, in our experience, we know that the 1 minute by minute,
Yeah,
it doesn't work
it's
too
hard.
profitable in our experience. But to each their own. Yeah, if it works,
Yeah.
it works. I think one thing with my patients, I was just thinking about this, is like how when I first started trading, I would just cycle through 24 pairs, just tick tick down my down arrow. I'm like, no position, no position, no position. And then as soon as I hit 24, I go back to one and start it all. We're talking like in 30 minutes, man. I'm like doing it all over again, doing it all over again. I'm like, now I'm at that point where, like, okay, if there's no one time through, there's no opportunity. Okay, I'm gonna give it an hour. Check back in an hour minimum. So I mean, sometimes it'll be 4 to 6 hours later, just dependent on the market and my lifestyle. So think that just walking away from the desk will help build patience. But I mean, yeah, that's a huge, I would say that's a huge regret, especially for setups.
For
Well,
set
what about extreme patients though, Glenn? Like, say a trader stays up all night watching a position, and like they need to be glued on. Is there a justification where, like, hey, I need to be at the charts? Or is there like, no, you can have patience and away from the charts? Or does patience mean I always have to be, you know what I mean? Like, what are your interpretations of this?
I mean, in that particular scenario, if the trader isn't comfortable enough to be away from his or her desk, when having a having a trading position in a risk, a trade on, there's a few things, right, that stands out to me. I mean, this is speaking from my experience. Either you have too big of a size in that trade, risk meaning, um you're going to be devastated if you lose that trade. um Two, you formulate some sort of conclusion in your own bubble where you feel, whatever conclusion it is, you feel like you need to be there watching your position, you know. But I think it's going to be this is going to be leading to the last point. But at the end of the day, like for me, this having the patience, um what comes to mind is me being able to wait for the proper setups, having that confirmation signal, and then be like, okay, it's go time, right? Aim, or ready, aim, fire. I was at fire, aim, ready, you know. So just being able, like, when I think about it, looking back at my trades, I would save much more money by being a bit more patient, letting those trades confirm and then get in rather than try to pre-jump the market to go ahead and get in. I still have though that kind of that feeling till this day. I'll fight with myself, but I know that I'm aware of it and I do a self-talk before I take any action upon it, to validate that if I get in, that means I have a valid signal to get in.
Like if it makes sense, yeah. Like if I could speak it out loud as to what I'm looking at and it's making sense to what I'm hearing, then yeah, I should place the trade. I think as I'm hearing you talk, it kind of makes me think patience is broken up into two things, right? Two parts of patience when it comes to trading. One, you're waiting for that dependable opportunity, that probable opportunity to show up. And so that's the first part of patience. Second, patience is okay, you're in that trade. Now it's like almost set and forget. You got to let the trade run. I have my stop loss set. I have my profit target if I set a profit target, or you set your levels, and then at that point you should be able to have patience. It's like patience has to be built into your plan. It has to be built into your system, right? I mean, that's part of these all go together. It's pretty
Yes.
funny, like risk
Yes.
management, patience. You need both to go hand in hand, and so I mean, but yeah, like
Yeah, if you so it just brought me up to that the story that goes with delayed gratification, folks. How do you that simple test that they performed, I think it was in Harvard or something, they performed it on kids and they put a marshmallow in front of them and they told them if you can wait 5 minutes, you'll get a second marshmallow, right? And if you eat it, then you only get one. And so they made the correlation. If you haven't heard this story yet, they made the correlation where they took that group of kids, they did the kids who did wait for that second marshmallow, they tracked them, after college and when they got into the careers, and they compared them to the children who did not have patience or did not have delayed gratification. And as an average or as a whole, that group of kids that had delayed gratification, they were a bit more successful in life, you know?
I think they measured it by like net worth, like what they made. Some became doctors and lawyers and all that. While those who couldn't do the delayed gratification, they weren't as successful jobs, right? I'll just leave it at that because I can't
Yeah.
really remember specifically what it was, but
Yeah.
it's a very fascinating study, and I mean, I think that's something that we as traders should really take note of with delayed gratification and bouncing off with having patience as well.
Yeah. That kind of just
Go hand
lines up
in
with
hand.
your second
Yeah.
part of waiting for the trade to unfold. You're in it and it's either gonna go both two ways. It's gonna hit your stop or it's gonna hit your target, or you know what I mean? So that was a good way to tie it in there. And the last point of our trading regrets is not keeping a trading journal, not keeping a proper journal, not documenting at all. Um, and that's key because we feel that it's that's your learning tool, especially in the early stages of trading. What can you say you're a year into trading and you don't have a journal? How can you measure your progress? Oh, but Glenn, I'm making more money. Okay, that's great. But how are you gonna get better as a trader? How are you gonna improve? How do you define those weak links in your trading system, your approach, your mindset, your risk management? How do you find those without documenting, without tracking your trading?
This is like my biggest regret for real is like not doing a trading journal the moment I placed my very first trade. because I feel like that, even like owning up, part of it is owning your mistakes in trading, and that's not easy to do. And I'm a reflection of like how hard that was for myself, because I didn't really get into journaling until like 2015. Then I lost it because of my brokerage shutting down, which is FXCM in the US. And then I couldn't get my trading journal from them. So just having it on your own, Excel, available offline, even with your notes that you have and the screenshots that you take on your own hard drive, like that is invaluable, man. Like imagine like Warren Buffett passing away and then he has a trading journal. Like how much would that go for, right? If he documented every single trade and his emotions. I'm talking like, I'm sure you could find financial records of like the trades that they make, but like I want to know what Mr. Buffett was thinking the moment he placed this trade, or what was he going through, and how did he overcome certain things? Because only a journal is a pure reflection of your own consciousness that you were going through at that time, and then even subconscious traits will appear, and that's why trading journal is so important. We really mentioned Brett Steenberger a lot, and I mean, he goes into why just journaling is important, because it does bring out the subconscious beliefs and the subconscious patterns that we can't identify consciously. And the only way we'll be able to identify that is when we keep those journals and we look back at those journals and we contrast from last year to current year. Okay, what was I doing differently, or how can I be doing better? And again, your trading journal is going to answer so many questions.
Yeah, definitely. Like if I was to choose, like if I had to learn, if I was able to learn from a great trader like Mr. Buffett, right? And say, you only can spend only so much physical time, especially with those kind of people. But if we really got our hands on his trading journal, boy, like I would study the heck out of that. I would just almost toss away all the courses and stuff I got, and I would just strictly
Really?
focus on,
That
yeah,
powerful, huh?
bro. You know what I
Yeah,
mean?
so I guess like the importance of,
You're
yeah,
tapping
you go
into their
ahead.
mind. You're tapping into their mind. You're understanding it from their point of view. And to me, that kind of data, like give me, you can do all these studies, but if you show me the step by step on how they came up with this conclusion and how they were to execute it and what their plan was and their mind frame was at the time, so valuable. Really,
Yeah,
like, yeah, like I
I
said, like,
second that. Like, yeah, journals could in the future could be worth a lot of money, because nowadays there's so many great traders that are popping up out of the woodwork because of the accessibility. It's so easy to jump on any market and trade now. There's not, I think in certain countries there's a cap to trade stocks specifically. But I mean, I'm thinking the bar to enter the Forex market, for example, is really low, even the options market, I hear. So, I mean, just there's going to be so many traders out there, so many greats that come up over the next 10 years to be able to tap into their trading journal. And then imagine them like, I don't have one, or I didn't keep accurate data. Like
you lying, bro. You lying.
it's sad, like, because that's one way to help future traders as well, is like, hey, just take a look at my trading journal, take a look at our thoughts on certain aspects, like, and see what you can pick and choose and apply to your own trading. I think everyone's journal could help everyone else out in an idealistic world.
Absolutely. We could go on and on, bro. Like you just got me started on this thing. Right. To sum it back up, when having the four biggest regrets when we started trading was not being realistic, right? When jumping into trading, not setting realistic goals, and you were expecting something way different than what the market's actually going to present you when you start trading. Managing risk properly, having zero risk management knowledge, experience, not knowing that is a crucial pillar in your trading approach. Not having enough patience, that goes in with psychology, that goes in with edge, right? And not keeping a proper trading journal. If you guys were to just work on those four things, you can speed up your learning curve that much faster. You will gain a great understanding, gain a great perspective on having the correct mindset into having a successful trading journey. Any last words, bro, before we wrap this up?
Just going off that last point about the trading journal importance, Glenn mentioned we could go on for another hour or two just talking about journaling and the importance of it. So we actually have an episode 18. We dive in deep into why journaling is important and the why we need to do it as traders. So take a look, listen to that episode 18. But other than that, man, that's all I got. You'll find that in our link notes, our notes of this episode. So thanks for listening, guys. Appreciate you guys' time and stoked to do this next one, man.
Awesome. Yep. Give us a follow. We are on all the social media channels at Hawaii Trading Academy. Check out our website, hawaiitradingacademy.com, hawaiitradingacademy.com. Whether you're looking to improve your trading mindset and growth, we'll provide you with the tools, tips, and inspiration you need to make your next breakthrough. So tune in and let's edge up together.